Are you interested in learning how to make money in nano stocks? Follow Uptick Newswire in our new multi-part video series as we explore the most common mistakes made by investors. In this series, Everett Jolly will provide an outline and share details on how to avoid these pitfalls and produce winning results, displaying how to make money in nano stocks.
On today's segment, we're going to talk about risk management. The odds are stacked against you. You don't need to need a 140 IQ to make a lot of money in penny stocks. You don't need a high business savvy IQ or either insider information. What you do need is sound intellectual framework in making decisions and keeping your emotions in check. And the three guys that I admire the most that kept their emotions in check and made a lot of money in the stock market is Benjamin Graham, the intelligent investor. You might want to take a look at that. Peter Lynch, One Up on Wall Street, How to Beat the Street, and Peter Leeds on investing in penny stocks. First, you must thoroughly analyze a company and the soundness of underlying businesses before buying the stock. And you must protect yourself against serious losses. So that being said, let me explain a little bit what I just said. To analyze a stock, what I do is I go to their 10Q or their 8K, and I look at it and see if they got revenues. If they got revenues, I put a plus sign in it. I look to see how much information they put out. How transparent are they to the public? Do they put out a press release once a week, once a month, or once a year? I like transparency. I look at companies that have a market cap between 1 million and 300 million. That's my sweet spot. That's where I think you can make a lot of money. First of all, I do my due diligence. Let me explain what I do. I go and look to see if they got revenues. I go look to see if their business model makes sense. Are they delusional, thinking that they're going to make hundreds of millions of dollars when maybe they're in a boutique or a niche market? That's not going to happen. One of the reasons why Google and all the other companies that made a lot of money, they weren't in a niche market. They were in a market that everybody uses. That who doesn't go to Google every day and use Google to look something up? That being said, I look at management. Is this their first rodeo? Have they had any great endeavors that they built some companies to multi-million dollars? And the great thing about market caps between 1 million and 300 million, you could actually pick up the phone and call and most likely speak to them and ask them, say, hey, what did you do before you became a CEO of XYZ company? And find out what they do. Next of all, again, like I said, I look at their financial report. The one thing about companies between 1 million and 300 million dollars, delusional, is that are they diluting the company? And the money that they borrow out there in the secondary markets to dilute the company, is that going to get them to the promised land? And really, that's the biggest thing that you need to overcome as an investor. Because all I hear, people send me emails every day, every week, say, Everett, I invested in XYZ, and every time I turn around, they're borrowing money, they're diluting, the stock's going down, going down. And that's what I said, you got to look at the financials. Are they an RD company? You know, how long is it going to take them to find revenues? Are they making revenues right now? Or do they just got a huge overhead? And you got to ask questions. Socrates once said, who's the educated man in the world, the most educated man in the world? And he said, the people who ask questions. So you got to constantly ask questions. Trend lines. We're going to talk about trend lines. What I like to do, and today's all about risk management, I draw a trend line. And what I do is that if at the bottom of the trend, if you draw a line up and you touch 3 points and you just draw a straight line, if that stock on the descending crosses that trend line, you have to sell. No matter if. Could have, would have, should have, you have to sell. And that's being disciplined. On the upside, if you draw a trend line from the top of the point down to the bottom and that stock breaks over that trend line, that's a buy signal. We'll get into that later on in episodes 4, 5, or 6. And usually that should be accompanied with volume. How I like to do, and we're talking about risk management today, is that I like to use the 5-bucket approach. And let me explain to you my 5-bucket approach. Let's say I start out with $2,500. I put $500 in each category, whether it be hemp products or companies, minerals, biotech, staple companies. And when they go up 25, 30%, I don't sell the whole position. I take a little bit of my money that I invested, I take the 30% and I let it ride. By letting them ride, you're going to miss 5 or 10 baggers. I can't tell you how many times I've gotten emails saying, I wish I would have held on to it. By my method, if you take off some of the money that you invested plus a little profit and let the other ride a little bit, you'll see better returns than you will. In closing, I want to tell you this. Our country was born with mavericks. That's what started our country. There's no more mavericks for me around here. You got to have a little bit of maverick money if you want to make money in the stock market. And I'm not saying put 30, 40% in, but you should take 5 or 10% of your assets and put it into some maverick money. Thank you very much, and looking to talk to you on my next segment.
This program is entirely sponsored and produced by Uptick Newswire, LLC, which is responsible for the content. The opinions and information provided on this program are for educational and research purposes only. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional.